Ever wonder what sets the winners apart from the losers? And what does it really take to be a winner? My name is Federico, and I'm a young, successful entrepreneur passionate about sports, real estate, mindset, and business. If you are just like me, then the Winning Ways podcast is meant for you. Yo, welcome back to Winning Ways with Fred. My name is Federico and I am your host. Guys, please, I know I repeat this a lot, but if you find this show valuable, if you like it, which I know you will with today's guest, please share it. That's how I am growing the show, and that's how I intend to grow the show, even when I get to the top 3 in podcasts. Today's guest, Jason Balara. How are you, man?
I'm good. How are you doing?
I'm great. Thank you for taking the time to come on the show.
Thanks for having me. I'm excited.
Awesome, man. So tell us a little bit about your story, man. How you got into all of this?
Yeah. So I guess I'm sort of living 2 lives at the moment. Yeah. My past is I'm a veterinary surgeon. My past and current, but I'm a veterinary surgeon. I've been doing that for, I guess, technically about 16 years now. But recently I have sort of transitioned into taking a much bigger active role as being a real estate investor in multifamily syndication. So I, am sort of going from being really, really full-time veterinary surgeon. And then I was kind of doing everything with real estate as a side hustle. And now I'm recently transitioning to, I'd say it's probably still split about 50-50 right now, where I'm doing surgery and then real estate, the other half of my time.
That's awesome. And it's one of those stories where I'm so intrigued by, because you studied your whole life to become a surgeon. You're living basically your dream life. And then you're like, hey, there's more to it. Why don't we start investing in real estate? So how did that come along? When was that fork in the road when you're like, all right, I want to start investing in real estate too?
Yeah, I always, I guess I always was a sort of a real estate investor, in the sense that I always did, people talk a lot about now house hacking and live-in flips and that. So I kind of always did that just out of necessity, right? Like a lack of funds. But I always liked the idea of ownership. So started out buying houses that, really need a lot of work, and kind of worked in construction for a while, before, during, and since in my veterinary career. Right. And so it was always a part of me. And then, sort of a lot of schooling to become a surgeon. But what really changed for me was when my son was born. He's 3.5 now. But what I realized was I was working a ton, and I can't be a surgeon from home, right? Like there's no remote work as far as that goes. And so I really came to the realization that we didn't have hardly anything in ways of passive income. And so I wanted to find ways to do something that I could free up my time. And so that's really where the transition came from. It was like, okay, I've already been active sort of as a real estate investor in a way, but on the residential side, doing flip. And so my first thought was, well, I'll flip houses, but that was really going to just get me another job. That's kind of how I see, there are people that flip and it's a giant business and they do, they run it as a CEO, but realistically, kind of when you're starting that, it is another job. And so I realized, okay, how can I make it more of a passive process? And that kind of led me down the path towards multifamily syndication, where you're going to have, on-site property managers. You're really just living in that kind of CEO role where you're overseeing everything, kind of, making things work, but I don't have to be there. I don't have to be on-site every day, swinging the hammers or talking directly to the tenants, because I'm doing all the leasing. So it's kind of a nice way to be in real estate functionally, but not be at the property.
Totally. No, totally. I get that. And it's awesome. So you were a surgeon, you did the house hacking at first. Did you have any rentals, any single family or multifamilies when you were in that point?
Yeah. At one point I owned so I rented out some of those single family homes, but I also owned a triplex in Boston, which is where I'm originally from. So I at one point owned a triplex in Boston. That was up until recently, over this last year and a half, that was kind of the largest property that I had owned. Okay. So I had some experience on that. And what I realized was I didn't like being like, I am technically, I guess, a landlord, but like, I didn't like being the leasing agent, the person kind of dealing with all that side of things. It is what people say about it, right? It's a lot of, you want to keep your tenants happy. So there's a lot of those phone calls in the night. If something breaks, kind of, even if you have someone else fixing those things, there's a lot of time involved with it.
I totally get that. And one thing you pointed out earlier was, because you start off, you're like, all right, let's wholesale, let's start flipping, make money. That's another job. You got to be on site. You got to make sure the contractors are there. Got to basically do everything unless you have it on a large scale. And personally, if we're speaking honestly, if you're going to scale a flipping business, scale a rental business, have property managers here and exactly be the CEO. So when you had a triplex, so I'm interested in learning the process you took to start acquiring these big deals. You only had a triplex, you had a single family home. So what were the steps? What'd you do to be like, all right, I'm going to start buying apartments?
Yeah. It starts with a lot of education. So, listening to podcasts like this, reading a lot of books, kind of getting into the Bigger Pockets community. Yeah. That's really where I started. It was just kind of consuming a lot of content, whether that was, written in books or I was listening to it or watching it. And then ultimately what I ended up doing is I got a mentor. And I think there's kind of two ways to do this. You can either get a mentor that, do a paid mentorship, or you're going to, sort of get that learning organically, whether that's doing sort of some apprenticeship and working for free or very little money. But as I mentioned, I already had a job. I had some money that I could use to invest in myself. So got a mentorship. One of the big benefits, I think, really any of the mentorships that you might do in the real estate space, at least, is the connections and the network that can help you form, right? You're able to leverage your mentor's connections and their network and grow that, sort of on hyperdrive, rather than, okay, I'm going to go to another meetup and I'm going to try and meet someone here. And then I'm going to go to another meetup after that. They've already have, kind of established relationships. They've already have established vendors that they might use, whether that's the legal team, property management, whatever it is. All of those things are kind of already there for you. And it doesn't mean you have to use every person that they use, but obviously if you're in a good mentorship program and you have a good mentor, they've already done a lot of that, sort of research and vetting of those people in their community. And so I started with that process. And then it's just a matter of putting in the work and saying, okay, I'm going to pick a market or maybe a couple markets. I'm going to go and form relationships with local brokers and property management and whoever I can connect with that can help me get my foot in the door. Right. Mm-hmm. So it's kind of like, what's that first step? And for me, I don't think people talk a lot about the broker relationships, but my first, the great relationship that got me my first deal was actually with a property manager. He and I had talked, we had made a connection through other referrals. He and I had talked a bunch. We'd looked at a bunch of other deals that I didn't end up getting. But then my first multifamily deal was one that he made the introduction to one of the brokers and told the broker, hey, I think this would be a great one for Jason. I had never met that particular broker before, and it worked out great. And it's sort of like, once you get that first deal, then it's going to snowball from there. It's not going to be nearly as much work to kind of get to the next one and the one after that. So it's education, and then it's, network and relationships, and then just doing the work.
For sure. And when you joined, when you got a mentor, did you join sort of a mastermind group, or you actually found a one-on-one mentor that was just guiding you through everything?
Personally, I found a one-on-one mentorship program. And I think one of the important things I think that people need to realize is or they need to do is get self-aware, right? So what type of mentorship program is going to be best for you? What are you trying to get out of it? And for me, there are mentorship programs that are huge groups, right? And it's like, and one of the big benefits of those mentorship programs is you're going to meet a whole bunch of people. So it's almost like that shotgun approach where it's like, I've met all these people. Maybe I'll find some partners amongst all of these people, and you're leveraging that community. You can do some deals with some different people in those groups.
Yeah.
For me, I tend to really like the sniper approach to things better, where it's let's focus on a handful of really important relationships and nurture those very well, really build those up, rather than trying to know like absolutely as many people as I can. Certainly it's a part of it, like building more and more relationships. But in the beginning, for me, it was much more to my personality to have that sort of one-on-one type of program where I got to have, calls with her weekly and essentially a personal relationship with one single person that was not, and it wasn't just like some of the mentorships you'll have, it's branded under a certain person's name, but you might never ever talk to that person, or you might talk to them briefly. And then you're sort of training with their people. And it's not necessarily a bad thing. It's just a different way of doing it. And it's not what appealed to me.
Yeah. And I think there's multiple ways to see it and do it. I mean, somebody starting off real estate, trying to get a couple wholesale deal flips, a single family home, then it's maybe more convenient to join those types of masterminds because they're also, the cost of entry are lower. But you, on the other hand, you're going for big deals. You're going for apartments. And at that point, I feel like it's the next level, and you need that, especially if you don't really have the knowledge behind it.
Yeah. Well, and I think, to piggyback off that, another really good point about it is like, if you're doing wholesaling or you're doing flipping, it's a bit of a volume type of play, right? Like if you're wholesaling, you want to wholesale as many houses as you can. If you're flipping, you're trying to wholesale or flip as many as you can. That's not to say you're not trying to do multiple, multifamily syndications, but like if I do 2 to 4 in a year, that's a good year for me. Like that's okay with me. I don't, some people are doing thousands of units a year. That's fine. That's good for that. That's a good year for them. For me, if I do 2 to 4 deals a year, I'll be very, very happy with that. And, maybe that grows over time, but in reality, if I was doing wholesaling or I was doing flipping, now I'm going to want to do 10, 20, 50 deals in a year. Right. And so it's just a different approach. Again, it's like, it's that shotgun versus sniper approach, I guess.
No, totally. Now, what's obviously the economy is getting a little bad. How are you looming through it? Like, how are you going to go to, obviously with interest rates going up and everything, how are you navigating this? How are you going to look, what are your new processes to look into deals?
Yeah. So the actual process hasn't changed, right? Okay. It's a very much, in single family, you've got to worry a lot about the comps and stuff like that, right? You've got to look at what everybody else is getting. And so in a market like this, maybe those prices are coming down a little bit, or the growth is slowing a little bit. And it's a tricky thing to me to say we're in a bad economy, because there's a number of still really good measures on our economy, but we're in a high inflationary period. And so the Fed is trying to slow that down. That's really, if the Fed wasn't trying to slow down inflation, then the rates would still be low, and it would be exactly like it was 6 months ago, right? We wouldn't run into this catastrophic problem like we did in 2008. We're just up against it on the interest rates being raised. And so, but the process for deciding whether or not it's a good deal is exactly the same, right? You're just putting in a different interest rate.
Yeah. Okay.
None of the rest of it has really changed. So you have to underwrite it to those higher interest rates, which means likely the amount you can pay for that deal is going to be down a little bit. Yeah. However, the flip side is rent growth is still really good. Like there's a lot of things that are still very, very attractive in that space. And so you just have to keep it still a math problem. And it's not an emotional thing. Now, I will say, like, because it's changing rapidly, what has been happening that wasn't happening 6 months ago is there's been a fair bit of deals falling out of contract. There's been a fair bit of retrading where, the price that you might have been able to pay at the start of the deal versus 2 months into that process is not the same. And so that stuff is happening. Other people are experiencing it. We're experiencing it. So there's some of that going on. But at the end of the day, it's still a very good asset class. And I think that what's going to happen, and I'm not an economist, but this is listening to people who are, the interest rates are going to go up. We're going to reach a point where it levels off because inflation sort of gets under control. And then the interest rates are going to come back down. And so if you are buying something at a price right now that is relevant to the current interest rates, and then 2 years from now, the interest rates are back down into the 3 or 4%, you're in a really good position at that point because you bought it at a 7 or 8% interest rate, which impacts the overall valuation. So to me, I see it as it's a time of opportunity for people who are buying. It's not a great time to have to sell.
Yeah.
Right. It's not a great time to have to sell, but you could look at it as if you've owned for 3, 4, 5 years, you're still in a really good position because it hasn't erased all of those gains that have happened over this tremendous bull market that we've had, going on 10 years. So if you bought 6 months ago or you bought a year ago with really short-term debt and you have to sell right now or refinance right now, that's probably a problem. But other than that, it's just a market cycle that I think will ride out and we'll take advantage of the opportunities.
Totally. Now, I'm going to get into the nuts and bolts of things here because I'm very interested and I know my audience is too. I'm 27. My audience is around my age, anywhere from 20 to 35-year-old, primarily men, into real estate. A lot of them wholesale, a lot of them flip. Some own rental, some own Airbnb. But most of us are high achievers and have visions and the end goal, or at least the next steps would be to get to your level in the sense of having a syndication, raising money and buying bigger units, right? Apartments. So when you started off, you decided I'm going to do this. You had an idea of the money. First and foremost, you raised money, correct, to buy these deals?
I did. I raised some. I have not been the primary capital raiser on my deals, but I have grown my capacity to do that through each deal and continue to do that. So it's capital raising is for sure a skill that takes some time to develop the skill, and it takes some time to develop that investor list.
Yeah. So can you touch on that? Because I'm very interested in that, and I know most people are too. But right now, it's like we're thinking. I like thinking big, and most people do too. And it's like, all right, if I'm buying these duplexes, triplexes, doing flips, getting these Airbnbs, why not put in the work a little more and start thinking a little bigger? And if you have the connections and you could raise capital, why not go for it, right? Now, I guess the where it stops you is like, okay, so how do I do this?
Yeah. Well, syndication, multifamily is very much a team sport, right? So if you're doing wholesaling flips, even, maybe up to 4 units, that sort of thing, even a little bit bigger on the small multis, like you could probably handle a 6 or a 10 unit on your own. But then you get to the point where it just really isn't. And I'll tell you, like, I was a DIY guy to the core, right? And so that was something I struggled with a lot when I made this transition into multifamily, in that I still thought I could do everything myself.
Okay.
I can't. I haven't seen anyone else be able to do it. I don't think it's actually possible when you're doing these large deals. And so for those people that you're talking about, sort of that audience that's trying to make that transition, what you really need to do is figure out what seat you want to sit in. Okay. So there's acquisitions, right? The deal finder. There's maybe the underwriter, and sometimes that's a shared role, but the underwriter, if someone's really analytical, that someone's going to kind of put all that together. There's capital raisers, which is what, and I will answer your question in terms of my knowledge on that, but the capital raisers, and there's asset managers. Those are kind of the 4 parts of the deal. And sometimes there's overlap. Someone might do more than one of those things. 2 people might share those roles, but ultimately there's 2 things about getting started in this business. One is figure out which of those seats you think you want to sit in. And it might change, right? Like I didn't really see myself as an acquisitions guy, but I've become that.
Okay.
And so figure out what you think you might like, what your skill set is, what you might enjoy, and then find other people with complementary skill sets to build that team. And so again, you might be doing a couple of them at the beginning, right? Like you could probably pretty easily be the deal finder and the underwriter, right? Because you have to be able to underwrite the deal to know if you found a good deal to bring to other people. If you want to raise capital, you need to start that process very early, right? So in a lot of cases, if someone wants to be purely a capital raiser, what I would say the best thing to do is to find other groups to link with and say, hey, I think I can raise whatever it is. I can raise, 250,000, 500,000, million, whatever you think that amount is. Probably dial it back a little bit, because I think we tend to overestimate what we can raise. So whatever you think that number is, go ahead and find other groups that are looking for capital raisers, because people always are, right? It might be the most challenging component of getting a deal closed of all of them. Managing the asset is probably the most challenging overall because it's a longer term, but raising the capital to get it closed is can take some work until you're a really experienced person, and then you have a long list of investors and it becomes easier. But those people that are starting out and wanting to make that transition from whatever it is, whether they were, on the residential side of real estate, or maybe they're coming from an entirely different career path. If you want to raise capital, you have to start talking to everyone about it. You have to start building that investor list. You have to start essentially having it in place before you ever have a deal. Because you're going to try to connect with someone. And if you say, oh, I can raise 500,000, and you come in with 50,000, it's going to damage your, kind of, I guess, reliability and their willingness to let you try again. Like I'm always happy to let someone try and do that. You have to have those honest conversations about what you think you're going to be able to raise, because that impacts maybe how many other capital raisers are brought in, or what that person who's really the lead sponsor on the deal has to bring together.
So let's talk a little bit about numbers here. Let's say the deals you're looking at, what would be the capital that typically you guys have to put 20 to 30% down, right? On these deals?
So you're going to have, it depends on the leverage of the loan, but you're going to have probably a good safe, amount. You're going to have between 65 and 75% loan coverage of the deal. And then you have to see whether or not you also have to raise for capital expenditures.
Of course. So with your deals that you're doing on average, what would you say would be obviously I know it depends on the deals, but let's say on the last couple of deals you've done, what's the typical capital you have to raise for that?
That is very deal dependent and market dependent, right? Because the way that they sort of talk about the deals is kind of on a per unit basis. And so like in some markets, you might be buying an asset that's, under 100,000 per unit. And in some markets, you might be buying it for 300,000 per unit. So if you're buying 100 units, that's a big swing in terms of what the value of the deal is. And then your amount of capital that you have to raise. So, I mean, it's, I think for the last few deals, it's been around 3 million per that we've had to raise. The next deal that we've got under contract now is much bigger. So it's going to be closer to 10 million. So it's most
so
of the
exciting
time,
though.
Yeah. Oh yeah. No, it's so like, exciting. It's exciting and terrifying, right? Like you want to have that growth. You want to take on those bigger, more. And the funny thing is, with the exception of the amount of capital, the bigger deals, you could actually say they're easier, right? Because everything's at scale, right? So if you're trying to manage a 50 unit apartment complex, say, it's like a little too small for on-site management, but a little too big to not have on-site management, right? So you're kind of in that middle. And unless you have several different, 50 unit apartment complexes in the same neighborhood or close together, it's hard to make third-party management really equitable, right? You start to lose those economies of scale. But then when you start getting over 100, 150, people that are doing 400, 500 unit apartment complexes, now you have a full staff.
Yeah.
Right. So you have a full staff. It's included in your budget. Now you really are working with economies of scale. You can do things like if you're doing a large value add project and you have, say you're getting 150 unit apartment complex, and you're planning on renovating 100 of those units, you can buy in bulk, right? You can buy your flooring in bulk, put it in a warehouse, and the cost to have that warehouse space rented out to hold all your supplies or a bin or whatever it is greatly offset by the fact that you just bought, 10,000 square foot of flooring instead of 1,000 each time you do a unit.
Yeah.
Right. So it's just the ability to use the economies of scale makes it dramatically easier to manage and more cost effective to manage over the long term, which is realistically how you make the money is managing it well. Yeah. But it means you have to raise more capital at the beginning. So it scares people. Right. So what you have to figure out is how am I going to do that? Can I do that myself? Do I bring in partners that can, maybe if you're raising $10 million, maybe you have 5 or 6 partners that are raising 1 million to 2 million each, right? Like maybe that's how it works out. Yeah. But it's a game of figuring out how to get things done, really is what it comes down to.
Of course. Now, transitioning from, and you were speaking of it earlier, transitioning from being a surgeon to doing this, 2 different skills, right? One of them, you're doing surgery all day. You're very focused on one thing. Here, you're more focused on teamwork, on how to acquire. What you were talking about. Tell us about that change. Like, was it difficult? What habits, what traits did you have to develop to really succeed in this?
Yeah. It was less different than I thought it was going to be.
Okay.
When I started, I thought 2 different worlds, none of it will be the same. Yeah. But what you realize along the way, and what people, when I mentioned before that self-awareness, what you have to figure out what you're already good at. Yeah. Right. And yes, if you think about doing surgery, I'm not doing surgery on these apartment complexes. However, what I do have to do is manage a team of technicians, put together anesthesia protocols, put together how we're going to the aftercare of these pets. So if you think about it from a broader picture standpoint, there are a lot of things that translate. Also, just like in surgery, if you encounter a problem in surgery, you have to figure it out, right? Like it's not like you can't put your hands up and walk away. Yeah. So you have to figure it out. And you have to stay calm. And so those are skills that I have used far more than I ever thought in the real estate world as well, because you're going to run into problems there. So it's like, rather than get worked up and angry and frustrated and throw my hands up, I just look for solutions and stay calm. And so it's realizing that you already have some skills that can translate, and then figuring out how to make those things applicable to what you're doing. And this is, again, why it's a team sport, right? So one of my business partners, like, he's very analytical. He's very good at the numbers. He's very much a systems guy and stuff. Yeah. And that fits well. That's very complimentary to me. I'm a big picture, get stuff done, like stay calm and orchestrate what needs to happen in a crisis. Yeah. And so you find those other people. You find those other people that you can work with well, and, have the same value systems that you do and everything. So it's just kind of, it's the transition has been challenging, but not for the reasons I thought it was going to be, right? Like, I'll say one thing, I thought I was doing this to get more passive. I can 100% tell you in the beginning, it's not particularly passive. It's a lot of work if you're trying to do value add projects. If you want to buy brand new, new construction type assets that have on-site property management, it'll be pretty passive, right? Yeah. It's just the leasing things and the turn. But if you're doing large scale value add projects and there's construction management and stuff like that, there's a lot to it. And so then it becomes an issue of building out your team. And again, I can take that from my veterinary world and my own veterinary surgery business, where I have found the technicians that I like working with and that I know I can trust and train. Yeah. And I bring them in. And so I look for personality. I look for people that I can work well with. And then I just find where they can excel and put them there. And I'm doing the same thing now as I start to build the real estate syndication company as well, in that I hired an assistant because I already knew the person she was, and I knew she could do the things I needed her to do well. And it's working out fantastically. I'm looking into hiring construction management. Like there's a lot of things happening and so you just need to build your team with people that fit into what your overall, dynamic and culture is, and stick to it. Right. Like,
which is another skill too, right? Finding the right people.
Finding those people is it's not, they're not just sitting out there easy to find someone that people that fit in your culture system, I guess.
Sure. No, totally. Now, when you were, I know you're still doing surgeries, but did you have your own hospital and had to build your own team, or you worked for?
Yeah, I had actually both. I had a W-2 job that I worked at another hospital and worked with the technicians that were hired, but I also have my own business, which is what I still have. I left the W-2 job, but I still have my own business through which I have hired my own team. So it's building that business is, like I said, very much like building the surgery business or the real estate business, in the sense that when I find someone who I enjoy working with and I know they can do, they don't have to know everything. They don't have to, but I can teach them, or I can find someone who can teach them. We can fit in those roles. If I can work with them, it's a far bigger asset than having someone that, I'm sure I could find veterinary technicians that have 20 years experience, but maybe we just don't mesh. And same thing, I could find a construction manager that might have 20 years of experience, but we don't mesh and it doesn't work out. Yeah. We might, right? But it's putting that culture first is, for sure, I think makes, for me anyway, it makes my day-to-day way better. For sure. Right? Like you want to enjoy what you're doing. Otherwise it's not worth it.
Yeah. So no, and I totally understand that having the right people in your team, as not even work-wise, surrounding yourself with the right people, just in general in life, greatly improves your life in every matter. Now, when you're looking for somebody in your team for the veterinarian or the real estate, what are some qualities, or what are you looking into them that you say, okay, this guy fits with me?
Yeah. Depending on I guess there's two sides to that, right? Yeah. I'm looking for someone who can maybe has the skill set that I'm looking for, or they have a skill set that I think I might be looking for in the future. Right. So if I find the right person and I happen to meet the right person, I'm happy. Like I'll happily make a job for them. Like I'll put them in. If I know that that's something that can benefit my businesses, I'll get them in as soon as I can. Beyond that, it is definitely more of a personality and culture fit, right? Like they need to be able to work well with others, treat the clients applying to veterinary clients, but also applying to the investors and vendors that we work with on the real estate side, treat other people with respect, and just, I have a strong work ethic myself. And so I do expect that of the people that I hire, like that, we're going to work hard, but we will have fun doing it, and I will reward you for it. So I also feel very strongly that no one will ever leave my companies because they're not getting compensated the way they should be, or they don't feel like they're being treated well. Yeah. Right. If they move out of state, or they just try to decide to leave, that's one thing. But if they leave, it's not going to be my fault. And I feel very, very strongly about that. And I think that's a kind of a lost thing in a lot of businesses where, employees get treated as if they are just that, employees. And I think if you create that culture and make them a part of the company, they won't leave you.
Totally. Totally. It's awesome too, because the story is so great. You were a veterinary surgeon. Now you have your own business. You translated those skills of opening that business to now to real estate. And now you're scaling the real estate business too.
Yeah.
Winning story, man. I love it. Now you don't have to share this information, but I would love to know, so like maybe one of the deals you're working on, like where is it at, type of units, what numbers. I mean, that would get people going. Because for us, I mean, the people, like the deals I'm doing are at max $1 million. And I'm here like, yeah, I'm doing well. And then here you are saying you raised $3 million for a deal. It's like, whoa, okay.
Yeah. Well, and I mean, listen, I'm happy to talk about a deal. We just closed one a week and a half ago. So Beautiful. I can kind of tell you about that. But let me just say, like, doing anything is a win, right? Doing anything towards bettering your future. And I think there's virtually unlimited possibilities of how to do that in real estate. Any of that is a win, because if you think about like people with short-term rentals, people with maybe you have a duplex or whatever it is, right? You probably own 100% of that.
Yeah.
I don't own 100% of my multifamily, right? Nobody own, well, not nobody. Most people don't own 100% of that multifamily. It's partnerships, it's investors. There's a lot that goes into it. So there's no wrong way to do this. There's no wrong way to get success in real estate. Yeah. I just chose syndication, but to be frank, like I earlier was emailing with a guy because I'm looking into getting short-term rentals as well. So it's kind of like there's a million different ways to do it and reasons you might do it, right? The short-term rentals are going to cash flow way better than a syndication will in the beginning. But at the end of the day, I'm going to build better equity with these syndications. So it's really just like, what are your investment goals? But anyway, to answer your specific question, I'll tell you about just the most recent deal that we just closed is and so, my market is Atlanta. I invest around Atlanta. I've been hyper focused on one market. It's a fantastic growth market. There's plenty of opportunity there. So I haven't felt compelled to need to look at other markets. Like there's a lot of great markets in the country, but I just focus on Atlanta. So nice. All my deals are right around Atlanta.
Okay.
And the one closed recently, it's a 70 unit townhome deal. So one thing that I have found, we have the specifically 3 deals in the same kind of area. There's one that's all 1-bedroom lofts. There's another that's sort of your more typical garden style that has multiple different. There's 1-bedroom, 2-bedroom, 3-bedroom apartments, and then this new one is all townhomes, and there's 2- and 3-bedroom townhomes. What I'm actually learning is I believe that having a unique product is actually a very good maybe strategy to take. So like our 1-bedroom loft style apartment complex, they're all the same, is actually leasing up very well because it's a sort of a unique product. Yeah. And I feel that same way about these townhomes in that there's not a lot of other townhome communities in that micro neighborhood, basically. Nice. And so it's a 70 unit. We got it for 135 a door, which I think is actually a really great base for that area. And the capital raise was just over $3 million. The like logistics of it or business plan here, there's kind of two. There's the 2-bedroom and 3-bedroom, but there are a subset of 45 of those units were renovated by the previous owners. Nice. And they were renovated to what they consider an elite renovation, but not what we consider an elite renovation. There's still a few tweaks that can be made. So the business plan is to go, when those units become available, go in and add the few things that will really make it elite, like, stone countertops, add a washer dryer hookups, little things like that, paint and clean, make sure the flooring is good. Right. And that's all those should need. And then the other, call it 35 classic units that haven't been renovated, go in and bring the whole thing up to that level of renovation. So, as tenants move out, you go in and you do the renovation. Now you can lease it for a higher value in the market, and kind of just move from there. I think in theory, with a townhome style community, you should have much less turnover than you would in like your typical garden style, because you're going to have like families really move into these things. And so you may not have the opportunity to renovate them as quickly as you would at like a garden style apartment, but that's okay, right? We're saving on CapEx. If one of your biggest expenses is vacancy. Yeah. So if you can keep people in them and you can gradually raise them up to a market rate, that's just as good as getting them out, renovating and putting it up to sort of that elite level lease value.
Got it. This is awesome, man. One day we'll be doing deals together. I'll be buying deals from you or one or the other. Now, let me ask you, you know Grant Cardone is?
I do. Yeah.
Okay. So the next 5 to 10 years, is that where you're looking to get to? Like to the points of owning billions under management?
To be at Grant Cardone's level in 5 to 10 years? No, I don't think.
Maybe not necessarily. Let me rephrase the question. Maybe not necessarily be like Grant Cardone, but is that what you aspire to get to? I
don't necessarily need to be a billionaire. It's not about money for me. Yeah. It's about freedom of time. So what I look at here is I definitely look at it as a 5 to 10 year time horizon. What I look at my life in 5 years, I want to have by that time, I want to have the ability to be completely passive if I want to. Okay. Right. So that's my goal. And I'm not going to be a billionaire by then. Like I'm not going to be at that. It's not that it's impossible, but it takes, it takes a long time to get to that level. Like I said before, like if I do 2 to 4 deals a year, that's going to very nicely keep me on that trajectory. I invest my own money in every single one of the deals. So I'm not, I'm not taking in a bunch of investors' money and in something that I don't believe in. And so my goal is to keep, kind of putting in some money in each deal. I invest in other people's deals passively as well. So that, like I said, because you typically look at the time horizon on these deals, it's going to be say 3 to 5 years. Yeah. So in 5 years, I should have had several of my own deals go full cycle, as well as some of these other ones I'm invested. And if the metrics continue to play out the way they had, you can expect essentially to double your money in 5 years, right? So if every 5 years I double what I have invested passively, in 10 years, like we could hope probably in 5 years we could live off of it, but in 10 years we could easily live off of it if I just keep putting it back in. Yeah. Right. So, you go through a deal, your money's doubled. Now I'm investing that at that double rate. And then 5 years later, it's double that. So one thing, you kind of mentioned earlier your age and that people, your audience are, that maybe late 20s, early 30s. I'm 47 now, and I started this truly getting, active professionally as an investor 2 years ago now. Yeah. You have way more time than I do. Right. So if you look at it that way, like you have 20 years on me to get to me, you could be Grant Cardone, right? Like you have time to do that. And it doesn't mean like people starting at my age can't get there, but I don't want to still be on the grind and hustle level in 10 years from now. Right. Yeah. Like I want to be at all my kids' ball games, their dance recital. Like I just want to be dad. Yeah. Like at that point, I just want to be dad. But to the people, to yourself, to the people listening that are younger, like you have a lot of time, use it to your advantage. Yeah. Right. Because if your money doubles in these things every 5 years and now you're mid 40s, 20 years, like the exponential growth of that money is huge. And you don't have to get as much in as like I do, who I feel somewhat like I'm playing a little bit of catch up. So I'm very passionate about that. People are not educated in these avenues of growing their wealth at a young enough age. And so it's actually one of the really cool things about like podcasting, social media, all of that is that younger people now have more access to it, where it used to be kind of like a rich old guy game. Yeah. That's really, but now it's like, you can't say that you can't find out about it. there's so many different avenues to get the information. So to me, it's I don't think I've gone off track on your question. Like, I don't need to see myself grow to the level of Grant Cardone. I don't really care about material things. Even two things I want to be able to do nice vacations with my family.
Yeah.
And I really like, my one luxury thing I really want is I want to be able to fly private, because I can't stand commercial flight. Like, it just makes me crazy. Like the waiting and like how things get canceled. Like, I just want to be, I don't need to own my own plane like he does. Like I want to be at the level where it's like, if I want to fly private with my family to go someplace, that's not like an unattainable thing. Right.
Yeah.
So that's the one thing from a, if I'm being honest about, like, from a financial standpoint, what I want, that's it. But otherwise it's really time. It's time. And then I've realized impact. Like, I want to be able to give back. I want to introduce these opportunities to my veterinary community, because people are not really, we don't get business training while we're going through, 8 and 12 years of veterinary training. So it's just, that's to me what 5 and 10 years from now looks like. It probably doesn't look a lot like Grant Cardone's life. His life is really awesome in a lot of ways, but also, like, I don't really want to have to maintain the persona of this like giant public image. I just, it's not me. So I want to quietly make a better life for my family and the people around me. But I do enjoy growth, right? Like, I do, believe me, there's no lack of drive to be successful at it. It's just what that looks like for me.
Yeah. Man, that's awesome. That was a great answer, honestly, because it goes to show it. Not everybody has the same goals or ambitions. I want to say ambitions, but everybody defines their own success, right? And for you, it might be exactly what you're saying, flying private and having the residual income to live your life how you want it. And for others, it could be becoming a billionaire. But as long as you attain that, that's your win, then that's you being successful. That's awesome, man. And I really enjoy talking to you, because you have such a calm personality. Yeah, you could tell, like, when you got to play ball, you're going to be competitive and you're going to crush.
Yeah. Yeah. I just, again, this probably has a lot. I don't know if I'm a good surgeon because I have that personality, or if becoming a surgeon helped contribute to that. But it's just, to me, it's like, you gotta go to work. There's no sense getting all, wound up about things. Like, just get it done. And I think that helps. It helps people around me to sort of know, listen, we'll get this done. Like, it's not, I have very little doubt in the ability to get things accomplished. And it's not a boastful thing. We'll figure it out. If I can't figure it out, I'll find the person who can, and we'll make it work.
Love it. Love it. And I know I've extended it a little bit. I have 2 more questions for you. So I know you maintain this like level of equanimity, you're calm. Have you worked on that, or is that just a natural trait of yours, your personality? And if you've worked on it, any tips? I mean, I meditate daily, and I still don't have that level of peace that you have. So
I mean, I will say the way I work on it is exercise. Yeah. Right. Like, you have to have an outlet. There has to be an outlet for me anyway. There has to be an outlet. And if I don't exercise enough and stay kind of in that mode, my wife knows, my kids, like, I don't have the ability to sort of stay calm, but I've definitely learned, I have learned that it doesn't get better when I'm not calm. Right. And I'll tell you, like, I'm very competitive when I play sports. I like loud music. Like, there are places for me to get that stuff out. Right. Like, when I play sports, I play hard. It's not, I'm maybe not the calmest guy on a soccer field. Like, there's, right. So it's just, there's places to me, there's a time and a place to do that stuff, but work, business, whatever it is, that's not the place. Like, I like to teach my kids, like, we don't have to blow up at things, right? Like, let's figure out how to solve the problem. So it's a good question. It's a really good question, but I'm not sure I know at this point the answer. It's sort of ingrained in me. And I think it's probably a little bit of both. It's probably a bit of, this is how I am. And it's probably a bit of learned behavior, probably in large part just from doing surgery.
No, but in a way you answered it though. I mean, you have that outlet, which is sports, the gym, working out. And I have that too, right? It's like, that's your place to let go, to be competitive, to let that, I guess, that competitive nature that we have, I guess you could say, out. So I get that, man. That's really cool.
I mean,
now,
I definitely want to win in business. It just, I don't think losing my cool helps me do that.
Yeah.
Right. So it's like, that's
easier said than done, though.
Sometimes, yes. Sometimes I do know how to step back and take a breath. I mean, that for sure, that's probably a learned behavior.
Yeah. I mean, I feel like with time too, you develop those skills. Mm-hmm. I'm getting there. I feel like, but there's still points where I'm
sure I wasn't as calm when I was 25. I'm sure it wasn't as natural then.
Last question. I do see a lot of books out there. I typically ask all my guests, any one or two books that you recommend that were really life-changing or really helped you?
So I'll give you two. The first one, because it's really what got me started into taking investing seriously, is a Long Distance Investing book by David Green. And that's actually a residential single family book. However, it gave me the idea that I could do this out of state. And I live in California, which is not always the easiest place to invest, at least for cash flow and things like that. Yeah. But recently, the book that I think has really changed my life, my mindset, is Who Not How, which is just like I said, I'm a DIY guy, like to the core, and it's very hard to change that mentality myself. Yeah. And so that book has helped me a lot. And I think about that like almost daily, like okay, here you are doing something again that probably someone else could do better. And allow me to do the things that I'm good at. So Who Not How. Anybody who asks me like about, I pretty much say Who Not How almost every time. Yeah, great book. It's funny you say that because I actually just finished reading it a couple of weeks back. I read The Gap and the Gain, which he wrote it too, and then Who Not How. I haven't read that one yet, but great. That's also been
and very easy reads.
Yep. Yeah. It's that's the thing, is they're really well written. So it's a good, it's a good, and Who Not How is funny because the author of Who Not How didn't write Who Not How. He found a who to write the book. So it's a pretty cool way to see that. I don't know if a lot of people know that haven't read it, but like the concept of you're writing a book on finding people to do things that they're better at is like, he went so far as to do that with his book. So it's a pretty cool concept. Yeah, man. Yeah, no, totally. Thank you for that. What's your social media, your website, so my audience could find you? Yeah. Website is larkcapital.com. My social media, I'm most active on Instagram, which is at Lark Capital, as well as LinkedIn, which is just Jason Balara. You can find me on there as Jason Balara. So either any of those is fine. Reach out through email is jason@larkcapital.com. So any of that is fine if people want to reach out. Awesome. Yeah. And guys, as always, I'll have these in the notes. Jason, thank you so much for taking the time to come on the show. People are going to share this. This was a great story. One of my favorite interviews so far. I actually haven't done an interview that's been an hour just yet. So that's how awesome it was. Thank you so much, man. Yeah. Thank you, Federico, for having me on. I really enjoyed the conversation. Awesome, man. We'll be talking soon. Bye. Ever wonder what sets the winners apart from the losers? And what does it really mean to be a winner? My name is Federico, and I'm a young, successful entrepreneur passionate about sports, business, mindset, and real estate. If you are just like me and you want to crack the code to victory, then Winning Ways Podcast is made for you.